Hey guys, this is Energy from Energy Financial, and I'm going to do a video about candlestick charts and bar charts and mountain charts. The average chart that you see on Yahoo Finance and stuff like that is a mountain chart, and it's basically just, straight up like that, straight down, and it's just a single line, okay? And then it may have the shaded underneath, but usually it's just that one line, and you know what I'm talking about. A bar chart actually has, I think you can see it here. Let me see. Right, where is it? Right there. As you see, it has a open and it has a close, and then it's just a single line. And if it's a good day, if it's bullish, it'll be green, and if it's bearish, it'll be red. And that's basically how it works. Down here, you can see what I did. See the open, close. Open was above the last close. Here it goes, and it just keeps going up. And it's a very simple way to look at charts. It's different from just a mountain chart. So it's definitely something to look into, and definitely recommend Googling bar charts. Now, candlestick charts. This is my favorite. I think it shows the most things because the body of the candlestick, it matters. The wick at the top matters. The wick on the bottom matters. And I kind of did like a little thing of this, and I'll show you right now. As you can see, the top wick is actually the day high. So you know that the day high is the top of the wick, and depending on how high that went, it shows how high the stock price went during that day. The day low is the bottom of the wick, and however low it went, obviously, is how low the price went that day. And the size, the actual body of the chart it's there to show you how much consolidation there was. Down here, you can see I did basically a little intro of this. It's the body size, and then you have, this is a really big body, and so say this was a green body, then that would mean there's a lot of buying pressure for that day, or I say buying pressure, but I really mean, it's basically like a war. Think of it like a war scenario. You have buyers and you have sellers. The buyers and the sellers are constantly in a battle, and whoever wins that day, that's how you should base your candlestick. So you'll see, like here, say this is green. Well, that green means that the buyers won that day. This one's red. Well, this is pretty big, so that means the sellers won the day. But if you come all the way down here, there's a lot of consolidation. And basically what consolidation is, it's just a whole bunch of indecision. People don't really know what to do, so you see something like that. And what also can happen, hold on, let me draw it. You'll have something like this. So you'll see the body of it is actually really small, but the wicks go both ways. So it actually had a lot of fluctuation during that day. So, you gotta watch out for that also, and it's a good sign that, stuff's getting volatile and people don't know it. People don't know. It usually happens around single numbers because that's a big thing, and it's a psychology thing. Once it gets around like 20 or 21 or just a solid number just in general, people set more stop losses, more trailing stop losses at whole digits than 20.67 or 20.43. So that's what you got to look at also. As I said, a small body means lots of consolidation and decision, and that's between the buyers and the sellers. And the buyers and the sellers are always in a war. Just think about it that way. It kind of helps me. It might help y'all also. A large body, which means the actual size of the candle, that means that the one or the other buyers or sellers actually had the most influence in that day. So it's definitely something to look at. A good way to do your chart is based upon how you trade, and I'm actually going to do a video about that here in a second, so you should check it out. Later, guys.